So most turnkey real estate investors today, they're using numbers that died 2 years ago. And I'm going to share with you 3 lies that I've identified that are putting people in some bad directions and also putting them in the situation where they are stepping over great deals to get to bad deals. And man, that's going to absolutely kill their cash flow and their overall net worth over the next few years. Okay, lie number 1, migration into Florida is slowing. This has been one of the biggest lies I've seen come out because the data shows the opposite. I was online a couple of weeks ago, and a friend of mine, an investor friend of mine, actually posted on Facebook that, well, what we're seeing right now is that Florida migration is dead and Ohio is booming. And I thought that was interesting. So I looked up the actual numbers, and what I found was there was a net migration growth in Ohio of about 52,000 people over the last 12 months. Now compare that to Florida, 497,000 people were estimated to move to Florida. And net migration, again, just means how many more people are coming into the state than leaving. Are the numbers going up or going down? Is there a net migration or a negative migration? Right now, both states that I just named, Ohio and Florida, are having it. But again, the numbers are pretty simple. And what we're seeing is Florida is almost like the tall poppy. It had incredible growth patterns through the pandemic. A lot of people wanted to be in the warm weather, the open laws that were here. But now what we're seeing is that it's being really put in a bad light. But the statistics show differently. Again, keep that one number with you. 497,000 net migration compared to 53,000. That is a huge difference. And all these things, when you have net migration or negative migration, that's going to hurt rents, obviously, because if people aren't there to rent, what are you going to charge them for? Or you're going to be in bigger competition with more of your neighboring investors. Absorption obviously is going to slow down, and long-term stability is going to slow down. Net migration is one of the most important things you'll find, which is why I came to Florida in the first place almost 20 years ago, because it's like a hockey stick when you follow it from the Fed charts. And this is something you have to look at. So when someone says to you at face value, migration into Florida is slowing, look up the real data. It's very easy to find. You can verify that online in about 10 seconds. What's the migration for your state? If it's growing, that's a great sign. If it's not, something you want to be careful of. So lie number 2 would be that Florida BTR properties, these turnkey new construction rentals, is oversupplied. That's just not true. Let's also scale back and look at the overall country. Right now, the United States is still short 4.7 million homes. That is a monster amount. That all started back in 2008 when things went completely quiet. We've never been able to pick back up and build the homes that we need nationwide. And a lot of that shortage is in the Southeast and especially in Florida. And when you look at build-to-rent properties, BTR properties, new construction turnkey rentals, these are in the affordable range. This is workforce housing that, again, like I've talked about in other videos, pretty much got left behind. When the real estate market really started to take off in the beginning of the pandemic, the builders jumped into action to build bigger, fancier homes that are not on the affordable range. Again, these would be about twice the price of the median value for an area. It's something, again, that you want to look at. And these properties, you got the low financing, they're beautiful in great neighborhoods, but that's where the oversupply was. There is actually right now a huge undersupply in affordable housing, workforce housing, because people, again, a lot of builders, they didn't want to build them because there's a smaller margin. For us, what we do is we work off a smaller margin and make up for it in volume. And this is something a lot of builders won't do. So they went to supply the emotional properties, which made them bigger spreads. But that left Florida for the workforce housing, especially new construction workforce housing. These rentals were still very short in supply. So you can check this in your local areas. Remember, when you're looking at properties, don't just look at the whole area. Look at the price ranges. Look at properties that are priced 20% below the median value up to the median. That's the area for BTR. That's workforce housing. I don't like to go to the cheapest priced homes in the area. Normally that's pretty difficult, higher crime, also tougher tenants, worse condition properties. I like to stick closer to the median, a little below the median, up to the median. And when you look at this range, again, if you're looking it up or working with a realtor or doing doing some of the research on your own, find out what the median value for that area is, and look up properties priced in that range. Also, as you know, I used to do a lot of rehab properties, don't do them anymore. I like the new construction now. There's less maintenance and repairs, less headaches, less surprises, and tenant demand is stronger for that. And the length of time that a tenant will stay is normally triple with the new construction turnkeys compared to the old fixer-uppers. So check this out when you're looking it up. See what actually is on the market in the range that I'm talking about. See if there's affordable rentals there. See if there's also homes for sale in this range. Again, with the BTR, this is its own specific niche, fulfilling the needs of workforce housing, which a lot of builders have left behind and are in need for the people that want to live there, but also investors for the numbers to make sense. So look at these numbers closely. That's where you should be keen on. When you hear these stories that there's an oversupply, which segment of the market, which market are they talking about? Again, Florida has 29 million people, soon to go up to 30 million people. So we're the third largest state in the United States. So that gives us a lot of different submarkets that you have to look at. Again, there's the absolute bottom of the barrel, cheapest priced homes, and there's the ones that go up to luxury. And in that, there are so many different submarkets that you have to look for. You have to look to see, is there oversupply in the submarket that you're looking to invest in, or is there not? This is absolutely key. And there's also different types of properties. If you're taking BTR, which is normally single family homes, maybe duplexes, maybe quads, these are lower density properties. You cannot put them in with large apartment buildings. They're a completely different market from residential to commercial. Tenants look at them completely different. The financing is completely different. So stick to just what you're looking for within that range. If you want to figure out oversupply, look in the submarket that you're looking at and also the type of properties that you're wanting to own and invest in. That's key to know whether there's oversupply or not. And if you do that, I can assure you, especially the areas that we're going into, BTR is not oversupplied. There's other submarkets in these different markets we've built in Florida that are oversupplied, but not in the affordable workforce housing that we stick to. And the third lie that you're hearing all over the news for several months now is interest rates have skyrocketed and all cash flow has been killed because of it. Not true. And so the problem with that is absolutely correct. In June of 2022, we watched interest rates take a large consistent spike up, and up. And that's not normal. Normally, if you look back on the Fed raising rates, it's more of a gradual either rise up or rise down. But with those large inflationary effects and all the strangeness that happened through the pandemic, they felt like they had to raise rates quickly to slow down the inflation, which was quite high. So that took our interest rates much higher, much quicker. And so especially people who just got into the market, they felt like interest rates are exorbitantly high. Historically, they're not. In fact, when I first got into this game over 26 years ago, my first loan on a 3-family property that I bought in Lompoc, California, good credit, was 9.125. Think about that for a minute, 9.125. So I have a different realm of experience or threshold for interest rates, and it's if it cash flows, it cash flows. But right now, the interest rates were helpful, and with that sudden jump upwards, there was the chance that cash flow could be killed. However, with builders, and again, this is why we only do new construction now, a builder with a strong balance sheet, that means they're in really good financial, stable condition, they can work with banks to do what's called a builder forward commitment. And that builder forward commitment, well, that's going to allow them to buy large tranches of mortgage money that you're going to be able to receive the savings on. That can get you a rate 2-3% below what the average banks out there are offering. So when you work with a builder and you get those lower rates basically what investors were getting in 2021, well, that's going to get you into a much better long-term loan that's going to go right to your bottom line, that's going to keep cash flow strong. And I've looked at the performers every day for different properties we build and others build. If they're in the right areas with the right demand and in that submarket of affordable workforce housing, cash flow can still be extremely strong. This is something that you have to look for. And again, something that people don't even look at as well, the new construction when it comes to maintenance and repairs, that is something that I wish I had learned 20 years earlier. I wanted to have as many homes as possible and get into them as cheap as possible. Seemed like a good good plan until you'd get down the road and the monthly maintenance and repairs and turnover that would come in, it would nearly bankrupt you. Especially I was into hundreds of properties, and that puts you in a dangerous situation, whether you own a few properties or a few hundred properties. And you have to look at these maintenance and repairs costs. I cannot stress that enough. These are the things that can absolutely break you down before you start to really kick in the acceleration of wealth. And again, it's not timing the market, it's time in the market with long-term buy and holds. This is something you have to look for. So know your numbers on that. It's not interest rates that have killed cash flow. If you're working with a builder, it could be those higher rates combined with higher maintenance and repairs from older, worse condition properties. That's something I suffered for. And look, in good times, that can really hurt you. In bad times, it can bankrupt you. So it's something you want to be careful with. And it's not just interest rates. But if you've heard today that interest rates are just too high, it doesn't work, I always giggle and say, well, that's not true. Which properties are you talking about? And are you working with a builder who can actually buy down the rate for you? Got to ask yourself that question. It makes a huge difference. So if your deal passes these tests where you're cash flowing off of day one, they're in good condition, new construction, where your maintenance and repairs and your turnover should be less, and your interest rates are matched at what you can get it in 2021, well, your deal will pass the litmus test for starting to build a portfolio that's successful and not a monkey on your back. So most investors lose money because they invest based on headlines instead of the realities of Florida right now. Net migration, almost 500,000. That to me is a positive number, but if you're listening to the lies, you're hearing that we actually have a negative net migration, which the stats could not show anything further from the truth. If you're hearing that there's an oversupply of property, then you're listening to a broad lie. The lie is that there is an oversupply of property. I always have to break that down and ask the follow-up question, which segment of the market, which part of the market? Again, with almost 30 million people in Florida, there are several markets and sub-markets. You have to look at your individual property, and to take an overarching lie of there's an oversupply, then it cancels you out from making a decision to step into a property that could start making you money today with potentially built-in equity. And that's even on new construction. And again, the interest rate dilemma. We've all heard about it. You're just getting bombarded with it. Don't listen to the hype. What is the interest rate on the property you are particularly looking at, especially in new construction? If you're working with a builder and they can get you a new construction investor loan as low as 3.5%, what's that going to do to your cash flow? Are interest rates too high? Absolutely not. Now, maybe on an older fixer-upper property that's on low-lying land close to the ocean where there's hurricane concerns, of course you got to do your numbers. You might get a higher interest rate on that. You might get a higher insurance cost. But those are the lies that you're listening to if you're looking at a property that's not affected by that. If you're looking at a property where you can get the lower interest rate, and that's long-term fixed. So the easy thing to do to see if the numbers are working, if these lies are playing into it, is first of all, look up the net migration for the area you're looking to invest in. I've done this in all the areas we're building in, and I always come away with a smile because I can see it continuing to go up. In fact, some of the counties that we're building in, that's our smaller second tier, there was more net migration in some of these counties than there was in all of Ohio combined. I always find that interesting. Nothing to beat up on Ohio, just when I had that situation where someone said that, obviously to promote something they were working on, which is great, but you have to look at these things. What is the net migration doing? It's very easy to look up and look at the numbers. When they're saying that the cash flow is dead because of interest rates, there's an oversupply, what is the cash flow day one that you step into? Read the pro forma. Is the property already rented? When a lot of people say there's an oversupply, well, when you're talking about build-to-rent, new construction rentals, if there's an oversupply, what that tells me is the property would normally be sitting vacant. If you're able to step into a property that's already rented, it's hard for me to believe that there's an oversupply, especially if it's a qualified tenant that's been living in the property. That tells me that it's still in demand. So keep an eye out for these things. These are the lies that will keep you on the sideline and prevent you from ever building wealth. Again, everyone is always trying to be timing the market instead of taking time to be in the market. And like I've said, being an investor for the last 26 years, it seems like my luck continues to grow the longer I allow myself to stay in the market with my portfolio. There's been ups, there's been downs, but overall, it's been able to go up. So don't let the lies sideline you. They will cost you more money than you can ever imagine, because if I hadn't started to take those steps years ago with these types of properties, in fact, not even close to as good as the new construction, I would still be sitting at a very flat, non-abundant state in my life. And that's not what you want for you, for your family. So I encourage you, don't listen to the lies. Test the lies. Look at the stats. And if you want to hear more about how we're cutting through the garbage to get you the best potential properties out there, then watch the next video. We're going to be breaking into a little bit more about what gets you under the hood so you know whether it's a green light or a red light. Talk to you on the next video.